Saudi Arabia shocked the market over the weekend by hiking its official selling price for its crude oil to all customers for December. An increase was expected, but the size of the increase shocked the market and was interpreted by some as a political move in response to U.S. President Joe Biden's accusation that OPEC Plus didn't care about the economic recovery as evidenced by the group refusing to add more barrels to the market beyond what they had already agreed to. Saudi Arabia's price-setting movements are seen as a bellwether for the oil industry. When it lifts oil prices, it is an indication that Saudi Arabia expects the market to tighten further. Saudi Aramco hiked the price of its flagship Arab Light crude grade to Asia for December by $1.40 per barrel to a premium of $2.70 a barrel over the Oman-Dubai average, the benchmark off which Middle East's crude exports to Asia are being priced. The $1.40 per barrel price hike for the world's most important oil importing market was much higher than analysts and refiners had expected, but a price hike was expected as recently as the end of October. A Reuters survey showed that at the end of last month, the majority of traders expected Saudi Arabia to raise the price of Arab Light for Asia in December by somewhere between 30 cents and 90 cents a barrel, over the $1.30 per barrel premium to the Oman-Dubai average for November. The actual increase was much more severe. In fact, it was the second highest monthly increase in OSP for Arab Light in 2 decades, except for the price war in March and April last year. The sharp hike in prices will likely prompt more pushback from major oil-consuming countries such as Japan, India, and the United States. Saudi Arabia also raised the prices for all its crude grades to all regions, including the heavy crude to Asia, despite weaker fuel oil margins there. Saudi Arabia generally sets the pricing trend for Middle Eastern crude from other major exporters such as Kuwait and Iraq.